Mm-hmm.
Okay. What's up, guys? No, that was really bad. Let's start it over again. Alright?
Welcome to the mobile home movement, where we showcase the beauty and affordability of mobile homes. Here we break false myths and share all the positive stories of how mobile home ownership transforms lives. I'm Franco Perez, and this is the Mobile Home Movement.
What's up, guys? Welcome to another episode of the Mobile Home Movement. I'm Tong, and I'll be your host for today. And today we'll be talking about the topic of mobile home finances. Not just mobile homes specifically, but some of this might even apply to a real estate property that someone wants to be getting. But today we'll focus mainly on the mobile home aspects. But coming into this, Franco, right, a lot of people, when they get a home, they would be like, oh wow, the home is too expensive, or they don't know how they could apply for a loan, or is it like a specific bank, or do they have to worry about their credit score, right? Could you help us kind of like dive into some of these misconceptions of these?
Oh, absolutely. I think the first thing is understanding, because there's a lot of myths and there's a lot of old news around mobile homes, kind of like how we always talk about, like, people think mobile homes look like trailer trash, that type of thing, but that's kind of an old perception. And there's the same thing with lending for mobile homes. A lot of people assume, oh, but there's no loans available for mobile homes, there's no loans available for older mobile homes or new mobile homes, right? So the first is understanding that there are, and as time progresses, in the past it's very difficult to get loans for mobile homes inside of mobile home parks.
Right.
But basically, as time is progressing, we're getting more and more loan options, right? We just did a lobbying thing in DC where we're trying to get more backing for funding to get more available financing when it comes to mobile home loans, right? So there are companies out there. I don't want to name any because in each state it's a bit different, but there's typically what you'll see is what's most common is 20% down, 25-year terms, and the interest rates are typically a 0.1 or 2% higher than a regular mortgage. And it's higher because there's less available options, but what's good is that there are options out there. And what's good too is that because it's on lease property, it is a little bit more risk for a bank, but it's important to understand what's the alternative. Am I going to continue always renting, or can I finance with these terms and have a better outcome, right?
Right. So from what I've seen, right, a lot of, let's say from an open house or when buyers come in, they would typically come in like, oh, I got a loan from Chase. It said mobile homes as an option. When it said manufactured housing, right? That's considered mobile home. It's part of real estate, right? But oftentimes we would have to be like, it's like, for me, I would say something like, oh, maybe, I'm wrong about it. You could go back to check with your financial institution. But if you were looking for, let's say, a mobile home loan or pre-approval, maybe that's something we could help you with.
Yeah. No, I'm glad you brought that up, because that happened to you and your buyer recently, right? It's like, hey, I got a loan from Chase or Bank of America. It says mobile homes, and I talked to the banker, and they said it's mobile homes, right? What's fascinating is there's a lot of confusion out there, and that's why we built this company, is to help clear the dust and make sure everything's smooth on the process, right? We have a whole process that's there to enable to make sure that these loans are what's best for our clients, that these loans are valid and are going to fund for our clients inside mobile home parks. So with that being said, there are loans out there from Bank of America, Chase, that says mobile homes, yes, but when you really read the fine print, and what sucks is that even the bankers themselves don't even really read it. They don't know that it says mobile home on private property. And what that means, it has to come with the land as technical real estate. Cool, you can buy a home that's on a mobile home on real estate and get funding for that, but usually that's not the case for mobile homes.
Right.
Yes, there are mobile homes that do come with private property, but most of the time these are mobile homes inside mobile home parks, and this is on leased land. which means that the land is being rented out. So the mobile home owner doesn't actually own the real estate below, which means that loan will not fund. They can run through the motion, make an offer, go pending, and I've seen this happen where it's like 2 months down the line, they get park approved, all excited and that type of thing. And at the end of the line, the lender's like, wait a second, hold up. This is not what we fund, right? And, you don't want to run into that mistake way later down the line. It's going to be a waste of time for everybody and such a drain for everyone as well. But it's important to understand that what you're looking for in a mobile home park is called a chattel loan. These chattel loans, that's what they call it, which is a manufactured home on leased property inside of a mobile home park.
Chattel loan, got it. Now we have a term that we could see from it.
Yeah, it sounds like cattle.
I mean, I guess that's how we'll remember it right now, right? Cattle.
Exactly.
Yeah, but going into it, of course, with mobile homes, it's a property that the owner themselves live in, and oftentimes it's for first-time home buyers.
Yeah.
Right. So I guess with that as well, with some regulations with the state or with the federal as well. From what I know, just briefly, there's like incentive programs people could apply for, stuff like that, as a first-time home buyer, or paying like a lower percentage of that. From your experience, does that apply for mobile homes, and how does that look like?
Yeah. So again, it's kind of a weird gray area, right? We get a lot of clients that are like, I have a VA loan, right? I'm a veteran. I have a VA loan. I should be able to use it. It's, and then also there's FHA. There's first-time home buyers, right? Unfortunately, that only works for real estate. And the unfortunate truth is, actually, it's not always a flaw, but this is not real estate. It's personal property that's on leased land. They don't own the land itself. So it's not classified as real estate. So even this veteran VA loan will not fund for this. It's not to say that there aren't possible other entities that will do it. CalVet is one that does for veterans. And there are other ones in the works as well. However, how do I say this? With FHA, first-time home buyers, what's a good thing is, what's a bad thing is that these don't work for mobile homes. FHA will give you a reduced down payment, that type of thing. What's cool is that you can buy a mobile home. Down payment is typically a lot less. 10-20% of a mobile home is much lower than 10-20% of a single family home. So it should be, in my eyes, or in many people's eyes, a much more attainable down payment to come up with, whether it's 10% or whatever. Now, the perk of the FHA and using mobile homes is that, let's say you've never owned a home before, you can buy a mobile home with one of these mobile home park loans or chattel loans. You can live in it and sell it 5 years, 3 years, 1 year down the line. Whatever you gain is the equity. You still qualify as a first-time home buyer. So you can still take advantage of the FHA or the first-time home buyer loan. You're still classified as this being your first home. So you can still take advantage of that later. You can't use it for the mobile home, but you can use it after you've transacted with a mobile home.
Wow. So basically mobile homes could kind of be like that first step to helping them, I guess, accumulating more money to be able to purchase or take advantage of that program to be able to get like a single family home or a condo or something of their want.
Exactly that. Yeah. And it's beneficial because a lot of, with how competitive home prices or home value real estate is, it's tough for a seller to justify taking an FHA loan sometimes because it takes longer, and they typically want to take a buyer that has more down sometimes. But having this as a stepping stone before doing the single family element or the condo or the townhouse element allows for them to have a smaller stepping stone before that.
Right. Yeah. I guess so. Going back into like the loans topic, and of course, oftentimes getting a loan, let's say in mobile homes, it's their first time. So some people might be wondering, how long does that process take, and how similar and different is it from like a traditional real estate loan, right? And are there like appraisals that come out?
Good question.
And stuff like that.
Yeah. So I'm going to be real that in the regular real estate world, there are several different options with who you can choose as your bank, right? I don't know the right number, but there's at least 40, 50 banks out there that will allow you to pull out a mortgage. It could be a credit union, it could be a large bank association, it could be a private co-op, that type of thing. And there's tons of options. So these banks are fighting for the business of these borrowers, right?
Right.
So with that being said, you have a lot of great terms, great service. We can fund in 10 days. You can have everything kind of guaranteed, and be able to make offers with release of contingencies. In the mobile home world, we're not at that phase yet. We don't have a huge amount of banks that will fund these, not yet, but we see it happening in the future. We do have like a funding department that help with the guidance of this, but typically you'll see terms of 30-day close, sometimes it's 45-day close, and because there are other contingencies in place when it comes to mobile home parks, they do have to calculate for the space rent, right? So you can have a generic approval, but every mobile home has a different space rent, so they have to recalculate that again. And then you're right, you do have to have an appraiser go out, which is the same as a real estate appraiser, but they have to appraise it specifically around a mobile home value. And then, outside of those two items, it's typically pretty much the same. You pay your mortgage, you have to get insurance, they'll ratio out your income to debt ratio. They're going to calculate your credit, how much debt you have out there in credit cards, car payments, that type of thing. But yeah, it's typically the same as a regular residential loan.
Right. And these loans could apply to both new and old homes?
Yes. There are more options on the newer HUD homes, which means 1976 or 1978 and newer. And there are less options on the older mobile homes because they're classified differently, because their home structure, the quality of them are older and lower standards than the newer ones. So there are banks that don't loan for those, and that is part of their criteria.
Gotcha.
And in every state it's a bit different too.
Yeah. Well, you just touched on that. My next question, of course, which is, are there any special considerations for older homes? Because they're older, but I'm glad you answered that. Yeah. So I guess that first part, before we go into the seller side, is there any advice you would have for, let's say, buyers looking into financing options, or what things they could consider before we get into, let's say, the seller's side for finances, or if they're looking for, a home and using it as equity, questions like that?
Oh, totally. I guess, it's so important, and I say this a lot on our show, to work with somebody that really knows mobile homes and that's an expert in it. And I say that because there are a lot of things you should look out for. Well, the main thing is really knowing that this is actually a bank that will fund in a mobile home park. That can be a devastating mistake. And, sometimes there are specialists out there that will not know or pretend that they know and execute and make a mistake. The second is making sure that they're making the right decision for that actual client. Is this something, are you going to be able to calculate this payment to them and actually tell them the real numbers? And is this something that's going to put them over leverage with their amount of risk that they have, right? Hey, is this going to be all of your down payment? Are you going to have a stable job to be able to cover this? This is what your payment's going to look like. Yes, it's going to build your wealth, but I don't want a family to be over-leveraged in their housing ratio. The third thing is understanding the terms, like, hey, is this a conventional loan structure? Is this a fixed interest rate? How does principal come into play and compared to interest? Those are things to look out for. Another major thing in mobile homes is your loan can often come into play when it comes to qualifying for a mobile home park application, right? So when you're working with a mobile home expert as a buyer, right, and that buyer's agent that's an expert at mobile homes knows how this will come into play when it comes to your park application, it makes a big difference, because once you're pending on a home, the park manager does have the right to ask for those loan documents. They're going to ask, how much are you going to be loaning out? What's your mortgage going to look like? What's your total payment going to look like? And they can put that into the calculation of whether or not you qualify. So picking the right lender before you even start to go pending is very crucial, because if it's off by $100 or so, then you could lose that deal. You could be pending on a home, start the application process, and if the numbers are not correct on the ratio, whether you need to make 3 times the housing payment or 2.5 times the housing payment, it's important that the agent or the specialist knows how that comes into play when it comes to working with your mobile home park application, right? So that's key. And then that's pretty much it for the buyer side. Outside of that is just understanding the fulfillment element, understanding how do we make sure to be attentive to the lender when they have their needs. Hey, we need a verification of employment. We need verification of residency, right? Where did they rent before? All these things, you just have to be on top of it when working with these banks.
Right. Yeah, I mean, definitely getting those documents in, and, depending on the process as well, it will really help the individual to speed up that process too, right? But so that wraps up for the buyer side. So going to some seller side is more of sellers Q&A you could expect, and for home, or not sellers, but more homeowners, right? Because of course, while when buying a mobile home, it might not be considered in like the real estate category, but it is a home at the end of the day. And of course, with the home, there might also, let's say, with tax benefits as well, and also some. So we could start with that first. So let's say in terms of finances or taxes, what are some, I guess, financial benefits when owning a mobile home?
So I guess first thing is, you touch on tax benefits, and it's very important. We're not really allowed, I don't want to get in trouble for any of this tax stuff. We're not supposed to really give advice on that. I would go to your tax professional, but you could come to find out that a lot of the interest payments that are made on these loans are tax deductible, right? So that's a big benefit that a lot of people mobile homeowners benefit from. And the other thing on how financing can help benefit a mobile homeowner, there's 2 ways. There's one is you own an old home, and understanding financing on upgrading your old home to a new one can be hugely beneficial. Understanding, hey, if I own an old home and I get a loan to do the construction of replacing my old home for a new one, what would my payment look like? Would I have to come up with a down payment? Yes or no? Sometimes you do, sometimes you don't. And then how would that payment look over the course of 20, 25 years, right? It could be an extra $1,000 a month, or it could be an extra $3,000 a month, depending on your area and your financing terms. Now, and the other is, if you're selling your home, it's important to be educated, or for your agent to be educated of how these loans work and what's the risk and what's the feasibility of this transaction happening when you get an offer made on your home as a seller, right? Hey, every time we represent the seller, we want to see these loan docs. We want to know that it's a bank that we've worked with before, or that we've heard of.
Mm-hmm.
If we haven't, we want to validate that this is a chattel loan for a mobile home park, and it will fund. And then also we want to understand, like, is this a bank that's hard to work with?
Mm-hmm.
Is it a bank that's easy to work with? Are they typically good on their timeline? There's not much to talk about on the seller side. I know the lending side is really on the buying. But that's, you really only use lending. I mean, if you already have a loan, cool, you could write off and get the tax benefits, or if you're going to purchase a loan to do the construction of your old to new, or understanding financing when it comes to receiving offers, because you're going to compare different offers, and sometimes many offers look the same, but if the tipping point is going to be a different bank and a better option, then maybe that could be the decision maker on that.
Gotcha. I remember what my question is now. But so this is a case I kind of recently bumped into as well, where maybe some of the buyers are seeing that, hey, can I apply for an equity for another home of mine to put it as a down payment for my mobile home? So I have that question. Let's say if they're a mobile home owner, are they able to use like equity of their mobile home to purchase a real estate property? Something like that?
It's a great question. It's a common ask. I wouldn't bank on it. I wouldn't say it's a guaranteed thing. It's kind of a up in the air thing. Or the truth is that the financial institutions don't yet understand the value or the risk profile of mobile homes and parks, right? So again, there's not a lot of bank options, as many as real estate. If we have $1 million piece of real estate, we understand the risk profile, that type of thing. So a bank can easily say, I will give you $100,000 loan and put your piece of real estate as leverage to hold you accountable to paying back that $100,000 back, right? To a bank, it's simple and that makes sense. Banks don't yet understand. There's still those common myths, whether it's a old school banker or that type of thing, but it is harder to pull equity or like a credit line or like a HELOC against your home. I have seen it done. Mm-hmm. I've seen refinances done. That is probably more common than a line of credit or pulling money out. But I mean, it's worth a try and worth an ask, and we can help people with that. But I'll be honest, it's not the greatest or where it should be just yet.
Gotcha. Okay. But yeah, I guess wrapping it up as well, I think it's more so for the buyer side that they're more concerned about what kind of finances or what kind of financing options they have. But any wrap up like words for, let's say, sellers or owners?
Yeah, I think mainly on the buyer side, make sure you work with somebody that's very familiar with mobile homes. I think that's key. The same with the sellers is that it's important you work with someone that has lending option and that's familiar with the process of these banks. Because in the real estate world, lenders and service, they do everything for you. You know, they are fighting for agents' business, so they need to make them happy. In the mobile home world, it's kind of not the same. We as a company, even though we have a whole entity and a process in making sure we have everything done correctly on the lending side. We do a lot of the work as a middleman in between just to facilitate, to make sure the loan goes through. So it's important to work with someone that's really knows what they're doing and knows how to reach out and apply pressure to help in a situation that will help your client.
Right, definitely. You know, like seek out someone who's experienced, especially with what we do on a daily basis as well. Well, that's exact same thing, when we come to purchasing a home, especially, right? But with that, we'll wrap up for today's episode and, stay tuned for our next episode.